Welcome back. Rashi Peripherals is down close to about 6%, and at one point of time, it was down nearly 8.5–9%. Now, the Q3 numbers were a bit disappointing. The company's top line has seen a growth of 7%, while historically, for the last many quarters, the company has seen double-digit revenue growth. And therefore, margins too are lower on a quarter-on-quarter and on a year-on-year basis. Kapal Pansari, Managing Director, Rashi Peripherals, is now with us on the show. Thank you very much for joining in. This is Reema here. So first, was Q3 slightly lower than your own expectations? Because revenues are down 23% quarter-on-quarter. On a year-on-year basis, you're no longer at that double-digit run rate.
So Q3 usually is post-Diwali, is the lowest quarter of the year for any given financial year historically. And therefore, that's a reflection of lower growth from year-on-year, from a quarter-on-quarter basis. If you look at from a year-on-year basis, we've continued to grow at 7.7%, which is also a little lower than our expected, primarily because of our working capital cycles got increased, and we want to make sure that we are on strong footing on these two fronts before we take that leap of growth.
So by how much did your working capital get extended in Q3, and what was the reason for that? And what would Q1 look like? Can you get back to double digit?
Yes, so Q1 will definitely look at lower double-digit growth. But in this quarter, the receivables got increased by about 7 days in our company. And therefore, that is the reflection of our higher working capital. This quarter, definitely, it has already started improving. And Q4 is also usually the second or the best quarter due to the year-end financial closing. A lot of budgets on IT spends gets consumed. And therefore, we look at good growth for this quarter as well.
Low double digit for Q4, right? The Jan to March quarter. Yeah. And receivable days will come back, or it's still going to be a little elongated? And what is the number at and your comfort level?
So usually our receivable ranges around between 40 to 45 days. Right now it is at 49 days, and it will come back to the similar levels.
Okay. Mr. Pansari, give us the outlook on margins. Both on a year-on-year basis, sequentially, there appears to be some moderation over there. So margins, Q4, how do you see that panning out? And FY26, where will be the guided margin range?
So while for Q3, I will just iterate that we have grown by about 7.7%. Our PAT margins have expanded by about 29.4%. Our endeavor is to continue to grow our bottom lines, and Q4 will also have similar expectations. Since we have a good tailwind on the 9 months to 9 months, our PAT has grown by about 62%, and that's a sign of our strong financial results.
Got that. The India AI mission has selected 10 firms for the Mega 10,000 GPU tender. Now, I understand you are a B2B company and therefore you will not directly participate, but you can indirectly benefit. So what is the role Rashi Peripherals is going to play in this?
Yeah. So in this AI mission, a lot of companies are setting up their AI-based GPU server and data center infrastructure. Rashi Peripherals has already implemented one of the large projects from NMDC Yota data center, and there are many more that will come in this AI mission to participate. However, such large projects, what data centers have realized is that such large, in one phase, they are not going to go. There will be smaller projects, which based on usage, they will keep on implementing, and multiple smaller projects will continue to come to us as an opportunity.
Understood that. The other question what we want to ask you is, especially when it comes, with your tie-up with quick commerce companies for instant delivery of Wi-Fi routers, keyboards, laptops, etc. What percentage of revenue is actually coming in from there, and how do you expect that particular segment to grow?
So quick commerce definitely is taking a lot of wave. We have the first movers advantage in quick commerce. Right now, the revenues are small, less than 1%, but soon this will probably grow exponentially. This is currently the fastest GTM market strategy for us right now, and it will continue to pan out. To what extent it will come, I really don't know, and only time can tell about this space.
What are the current volumes? I understand it's very, very small, but what are the current volumes? And in the last 3 months, say in Q3, what was the growth rate from quick commerce?
Quick commerce, I think it is in triple-digit percentage growth numbers because earlier the base was non-existent. So the percentage growth doesn't really matter. Right now, the volumes from a contribution perspective I can give you is in lower single digits, which is currently growing at about 2x or 3x.
Okay, and what are the margins that you would make via quick commerce versus the traditional channels?
Yeah, similar to the traditional channels, I think they are not keeping a lot of inventories. They are turning around quickly, and our replenishment cycle also gives them ability to rotate faster. So the margins are similar to our general trade margins.
Understood that. Mr. Pansari, any plans for inorganic growth?
So in organic growth, we've recently announced an acquisition of a cybersecurity distribution firm. I think that is one of the first of our announcements from an inorganic growth perspective. This is our first initiative towards getting into the cybersecurity space. We are hoping that we've made an announcement. I think they're working still on this category. You will see our participations in such inorganic growth in segments where we're not existent as of now.
Indeed, Satcom Infotech is the company that you recently announced an acquisition, yes, which opens up avenues in cybersecurity. The acquired company had revenues of about 170 crore rupees as of FY24 with a profit number of 2.5 crore. Kapal, thank you very much for joining in. That's Rashi Peripherals saying that the working cycle got elongated in Q3 and therefore growth slowed down to some extent. But going forward in the subsequent quarter, Q4, which is traditionally a strong quarter, growth will get back to low double digit. And even the receivable days will come back to normal levels of 40 to 45. We will slip into a short break. On the other side, we'll get you more in the markets.